We are covering these 6 top actively traded stocks that are bullish today. While watching price actions, let us inform you our review on MU. Holdings Ltd, the Brazilian digital banking powerhouse, is making some bold moves to refine its leadership structure and sharpen its global strategy. On March 21st, 2025, the company announced a management restructuring designed to boost efficiency, enhance customer focus, and improve cross-country collaboration. Founder and CEO David Vélez remains at the helm, while President and COO Youssef Larek will now take charge of global enterprise and product operations. This shift signals a clear intent to streamline decision-making and drive innovation across MU's rapidly expanding footprint. One key change is that the Chief Product Officer position won't be refilled following Jag Dugul's transition to an advisory role. Additionally, the Chief Legal Officer position has remained open since February, which could mean MU is rethinking how it structures leadership roles or simply taking its time to find the right fit. For a company that's been growing aggressively beyond Brazil into other Latin American markets, this restructuring suggests a strategic push to scale efficiently while maintaining its competitive edge in digital banking. For investors, this move raises a few key questions. Will the new structure make MU more agile in responding to market shifts? Can it maintain the same level of innovation without a dedicated Chief Product Officer? And how will this impact customer experience, a core part of MU's success? If the restructuring delivers on its promise of greater efficiency and focus, it could set the stage for even stronger growth in the years ahead. With competition in digital banking only intensifying, MU is clearly positioning itself to stay ahead of the game. Our review on MUFG. Mitsubishi UFJ Financial Group Inc., Japan's largest financial institution, is a powerhouse in global banking, offering a broad range of financial services across multiple segments. From corporate and retail banking to asset management, digital services, and global commercial banking, MUFG has a far-reaching presence that extends well beyond Japan. With operations spanning international markets, the company plays a key role in shaping financial services worldwide. Lately, MUFG has been doubling down on digital transformation and global expansion, aiming to stay ahead in a rapidly evolving financial landscape. While its traditional banking services remain strong, the firm is increasingly focused on integrating fintech-driven solutions, adapting to changing customer needs, and streamlining operations for efficiency. The corporate and retail and global commercial banking segments continue to be key revenue drivers, but MUF's strategic push into digital services and asset management signals a shift toward future-oriented growth. For investors, the main focus is on how MUFG navigates this balance between its long-standing banking operations and the increasing demand for fintech innovations. The company's ability to leverage its vast financial network while expanding into digital finance will be critical to maintaining its competitive edge. With economic uncertainties, regulatory shifts, and the global banking sector facing new challenges, MUFG is positioning itself to not just weather the changes but emerge stronger. Given its scale, resources, and strategic vision, the company remains a significant player in global finance with plenty of opportunities ahead. Our review on ACHR. Archer Aviation Inc. is pushing hard to make electric air taxis a reality. But like the rest of the eVTOL industry, it's facing some serious turbulence. Their flagship aircraft, Midnight, is designed for short, efficient urban trips with quick turnaround times. The company is betting on 2 key revenue streams: running its own ride-sharing service and selling aircraft to other operators. But while the vision is big, the road to commercialization is proving longer and tougher than expected. One of the biggest challenges? Regulation. The FAA isn't moving as fast as some had hoped when it comes to certifying eVTOL aircraft, making a 2025 launch increasingly unlikely. And without clear global regulatory alignment, international expansion, once seen as a major growth lever, could take longer than anticipated. The UAE, for example, was expected to be an early success story for eVTOLs, but that rollout is looking less certain in the near term. At the same time, the once-hyped trillion-dollar market for eVTOLs is seeing some recalibration. The commercial passenger market is progressing slowly, and companies are now exploring alternative revenue streams. For Archer, defense applications could be a game-changer. The company is gaining traction among investors who see military contracts as a more immediate revenue opportunity, offering a potential hedge against delays in urban air mobility. Despite these challenges, Archer is keeping the momentum going. The stock jumped 14% recently, likely fueled by excitement around its midnight commercialization program and a new partnership with Palantir to develop AI-driven aviation solutions. These moves signal that Archer is staying aggressive in its innovation push, even as the broader market slows down. Looking ahead, Archer's success will depend on how well it manages its financials, balancing cash burn, dilution risk, and the pace of aircraft deployment. The competition with Joby Aviation is heating up, and the valuation gap between the two is closing. While the eVTOL revolution isn't taking off as fast as some had once predicted, Archer is still in the game, adapting to the shifting landscape and positioning itself for what comes next. Our review on HIMS. HIMS and Hers Health Incorporated has been making waves in the digital health space, redefining how consumers access healthcare. The company's all-in-one platform offers everything from virtual doctor consultations to prescription fulfillment, covering areas like dermatology, sexual health, mental health, and even weight loss. With its consumer-first approach and seamless digital experience, HIMS and Hers is tapping into the growing demand for convenient, on-demand healthcare solutions. Recently, the company has been in the spotlight, with its stock drawing attention from investors looking for strong growth plays in the telehealth sector. While traditional healthcare providers still dominate the industry, HIMS and Hers is carving out a niche by offering a modern, subscription-based model that keeps users engaged. Their ability to personalize treatments and deliver medications directly to consumers is a key differentiator, especially as more people prioritize ease and accessibility when it comes to managing their health. One of the biggest drivers of the company's momentum has been its focus on expanding product offerings. Weight loss treatments, in particular, have been a hot topic, with demand for GLP-1 medications surging across the industry. If HIMS and Hers can effectively scale its weight management services, it could unlock a major new revenue stream. Meanwhile, its pharmacy operations through MedisourceRx give the company more control over fulfillment and costs, something that could prove valuable in an increasingly competitive landscape. Of course, with growth comes challenges. Maintaining strong margins while scaling operations is no small task, and competition in digital health is heating up. Big players in traditional healthcare and retail pharmacy are also ramping up their telehealth efforts, meaning HIMS and Hers will need to continue innovating to stay ahead. Despite the hurdles, the company has positioned itself well in a market that still has plenty of room to grow. With consumers becoming more comfortable managing their health digitally, HIMS and Hers is in a prime spot to capitalize on shifting trends. For investors, the big question is whether the company can keep up its strong growth trajectory while navigating the challenges of scaling in a competitive industry. Our review on AAL. American Airlines Group Inc. is one of the biggest names in the skies, running a vast network that connects passengers and cargo across the globe. With nearly 1,000 mainline aircraft and a strong regional presence through American Eagle, the company plays a major role in shaping air travel. From its hubs in Dallas, Miami, and New York to international partner gateways in London, Tokyo, and Sydney, American isn't just flying routes. It's navigating the ever-changing dynamics of the airline industry. Lately, American Airlines has been making headlines as it adapts to shifting market conditions. Rising fuel costs, fluctuating travel demand, and ongoing labor negotiations have all been key factors influencing the stock. While the airline industry has seen a strong rebound from pandemic lows, Investors are watching closely to see how American manages costs and keeps passengers in seats amid economic uncertainty. One big focus for the company right now is operational efficiency. After facing challenges with cancellations and delays in past years, American has been working to streamline its operations and improve reliability. That's critical in an industry where customer experience can make or break loyalty. The airline has also been optimizing its route network, making strategic adjustments to ensure profitability in a competitive environment. Cargo has been another bright spot. While passenger travel dominates revenue, American's cargo division has been quietly benefiting from global supply chain shifts. Demand for air freight remains strong in certain sectors, and the company's wide-reaching network gives it an advantage in moving goods efficiently. Of course, the airline business is cyclical, and American faces its share of challenges. Competition remains fierce, with budget carriers pushing fares lower and major rivals investing heavily in premium offerings. The balance between affordability and profitability is a tricky one, and with economic pressures still lingering, demand trends will be key in the months ahead. For investors, the big question is whether American Airlines can continue navigating these challenges while maintaining strong financial performance. With its extensive network, improving operations, and focus on efficiency, the airline is positioning itself to stay competitive. But as always in the airline industry, turbulence is part of the ride. Our review on HOOD. Robinhood Markets Incorporated has made a name for itself as the go-to financial platform for everyday investors, breaking down barriers to stock and crypto trading with commission-free access. From brokerage services and fractional trading to crypto wallets and even a new credit card, Robinhood is constantly evolving to keep retail investors engaged. Lately, the stock has been on a tear, jumping 21% in just a week. That's a big move, and it didn't happen in a vacuum. The broader market has been bouncing back after a rough 4-week stretch, helped by the Federal Reserve's decision to hold interest rates steady. With the S&P 500 NASDAQ regaining some ground, investors are feeling a bit more confident, and Robinhood is riding that wave. But here's where things get interesting. Short interest in Robinhood has been climbing. The number of shares sold short is up nearly 10%, meaning more traders are betting against the stock. Right now, 3.33% of Robinhood's available shares are shorted, which is slightly above the industry average. That doesn't necessarily mean the stock is doomed for a pullback, but it does suggest some skepticism in the market. So what's the big picture here? Robinhood has been benefiting from renewed market optimism, but it's also facing scrutiny from traders who aren't convinced the rally will last. The company has been expanding its offerings, retirement accounts, 24-hour trading, even dipping into credit products, but questions remain about long-term profitability and growth. For investors, the tug-of-war between momentum and skepticism makes Robinhood an intriguing stock to watch. If the market keeps climbing, the stock could keep benefiting. But if sentiment turns, those short sellers could end up on the right side of the trade. Either way, Robinhood is staying true to its brand, keeping things interesting for retail traders. Please subscribe, give the video a like, and watch more from our playlist. Thanks.